Optimism and bullish crypto news are flooding social media, but here's something worth paying attention to. The intrinsic value of Bitcoin suggests that the current market price is trading 40% below its real value. In today's video, we're going to break down whether we can expect a rise in Bitcoin's price, or if all this optimism is actually part of a large-scale manipulation orchestrated by major institutions. Right now, you're seeing on screen the chart that shows Bitcoin's intrinsic value. That's the red line I'm highlighting for you, and it's calculated based on mining costs and energy consumption. And of course, in contrast, we have the black line you already know well, the actual price of Bitcoin. Let's take a moment to really focus on what this means. The idea behind the intrinsic value is to remove all the noise, to strip away the speculation and volatility that surrounds Bitcoin's price. We're going to analyze this with a simple observation. Bitcoin's price is extremely volatile by nature, yes, but notice how that volatility constantly pivots around or returns to its intrinsic value. When the price falls below that value, it tends to move upward to find it again. When the price shoots above, it eventually comes back down toward that same reference point. This is what we call a mean reversion, and it could be signaling to us when Bitcoin is undervalued based on this underlying model. And if we take a look at Bitcoin's historical price action since 2017, we can see this pattern repeating. Likewise, when Bitcoin gets extremely overbought compared to its intrinsic value, the price has a tendency to fall back toward it again. Now, this isn't magic, and it's definitely not the holy grail of crypto trading, but there's no denying that this mean reversion to Bitcoin's intrinsic value is real. So now, let's zoom in on this recent section of the chart. You don't even need to look at the short term here. It's clear that the price recently came very close to its intrinsic value, but even in that proximity, we can see a moment where the price decoupled again, only to try and make its way back once more. Now, once again, we're seeing a fresh decoupling, and it looks like the price might be attempting to reconnect with Bitcoin's intrinsic value, but is that guaranteed to happen? Of course not. There are no certainties in this game. Just look back at 2017. Anyone could have thought that from this point right here, the price was going to move back toward its intrinsic value, or from this other point, or this one, or this one. And in every case, a lot more time had to pass before the price finally did return to its fair value. You can replicate that kind of setup as many times as you want, right here, or even here. Same idea. The message I want to get across is this. This is not some magical indicator. Not even close. In fact, it's an indicator that can fail, especially when it comes to timing, because timing, that's the one thing this model just can't give you, and that's why we always cross-check this analysis. We combine Bitcoin's intrinsic value with our advanced technical approach, focusing on what the big institutions might be planning, what the smart money is doing in the background. We'll look at that a bit later, because right now it's not just about this potential bounce toward intrinsic value. This week, there have been a couple of news stories that barely got any attention, but in my view, they're going to have a massive impact on Bitcoin's long-term price. The first story involves Stripe, the second largest global payment platform in the world. Stripe is currently working on a new US dollar-backed stablecoin product designed specifically for companies based outside the US, the UK, and Europe. To put things into context, Stripe's payment gateway is integrated into 17% of all online businesses worldwide, and in the United States alone, it powers a staggering 68% of online transactions. So why is it a big deal that Stripe is working to integrate stablecoins into its payment network? It's simple. If this rollout goes global, it could trigger massive crypto adoption almost overnight. Think about it. The ability to pay in crypto, just one click away on thousands of websites, could help normalize cryptocurrency payments even for the biggest skeptics. But here's the twist. Stripe is not launching this new feature in the US, UK, or Europe, arguably the most attractive markets to introduce it. Why not? Because of regulatory uncertainty. In Europe, the MiCA law is still being developed and phased in, and that legal gray area is holding companies back from launching bold crypto products there. In the United States, under former chairman Gary Gensler, created an environment of uncertainty and legal risk for crypto companies operating in the country. But that hasn't stopped Stripe from moving forward. They're deploying their new system across the rest of the world, getting fully prepared and operational for the moment they can finally enter the US and European markets. So for now, we'll have to wait and see how Europe finalizes its crypto regulations. Only then will companies be able to operate with confidence. And the same goes for the United States, because let's be honest, economist Gary Gensler slowed down crypto adoption in the country. But now, with Paul Atkins stepping in, a Trump ally and the newly appointed chairman of the U.S. Securities and Exchange Commission, things might actually start moving toward a more crypto-friendly regulatory environment. That's why Stripe and other crypto companies seem to be waiting patiently to enter these highly profitable markets. Speaking of Paul Atkins, in one of his very first public appearances as SEC chairman, he spoke at the agency's third roundtable discussion on crypto regulation. The event, titled Know Your Custodian, took place on April 25th, and during the discussion, Atkins expressed optimism about the enormous benefits of blockchain technology, highlighting efficiency, risk mitigation, transparency, and cost reduction. He also made it clear that one of his goals as SEC chair is to provide clear and consistent rules for crypto assets. He subtly implied that under Gary Gensler's leadership, the agency had contributed to all the regulatory and market confusion. But let's be real, Paul, there's no need to imply anything. We're saying it loud and clear. Gary Gensler did create a regulatory chaos in the United States. It was honestly painful to watch the U.S. shoot itself in the foot like that. But Atkins went on to say, and I quote, "I look forward to engaging with market participants and working with colleagues in the Trump administration and in Congress to establish a rational and effective framework for crypto assets." On the other hand, Veronica McGregor, chief legal officer at the crypto firm Exodus and a participant in the roundtable, shared the following thoughts. She said they've noticed a shift, that they're no longer as worried about being wrongly accused of things they aren't doing, like acting as unregistered securities brokers. She described the current environment as less intimidating overall. That said, it's still not totally clear what the final crypto regulations in the U.S. will look like. But what does seem clear is that the mood at that roundtable was hopeful. Participants seem optimistic that the U.S. will finally move toward a coherent, workable framework for doing crypto business in the country. That said, we're still in the early stages of seeing what changes Paul Atkins might propose. Everything will come with time, step by step, and hopefully step by step. It's worth noting that the SEC's Crypto Working Group is scheduled to hold 2 more roundtable sessions, one in May and another in June, to discuss tokenization and decentralized finance. So we need to stay alert, because the crypto ecosystem could benefit massively if the United States finally decides to fully embrace this sector. And honestly, I think this is obvious to everyone. If favorable crypto regulations start rolling in across the US, that alone could serve as a huge catalyst for the price of Bitcoin, and of course for the rest of the altcoins as well. Now let's break down how all of these developments could actually affect Bitcoin's price. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
into a podcast. Let's look at the current state of Bitcoin and the broader crypto market. What you're seeing now is Bitcoin's daily chart. And as we've been tracking, the price is currently pressing up against the upper boundary of the channel. This is a critical moment because, yes, we've already analyzed this entire upward move and identified it as a classic distribution phase, a phase where large institutional funds were selling Bitcoin aggressively. And we broke down how that selling was managed in a way that allowed them to reach their institutional target, a target where other big players were ready to buy that supply, completing the distribution cycle. As you can see, they brought the price of Bitcoin exactly down to the decimal to that institutional take profit zone. That's what we call a short covering level, where institutional shorts start closing positions and collecting profits. So when it comes to that distribution, what you're seeing here is a supply line, a level where the big players were defending their bearish bets, and that's why we began to speculate that if we ever saw a break above that line, a so-called black swan breakout, it could be the moment to flip bullish. And if you've been following the Crypto Insight videos, you know we were already leaning bullish on Bitcoin from this level. Not just once, 2, 3 times. We kept repeating it. We were already turning positive. Even when the market was filled with fear about Donald Trump's trade war. You've heard my take enough times already, so I won't repeat it again here, but we were watching and been waiting for this black swan moment, this breakout, because it would signal that those institutional shorts were backing off and giving way to those ready to go long. We've already had some excellent buying opportunities in the past, but now the question is, what can we expect next from Bitcoin's price? Well, don't forget, Bitcoin's intrinsic value might be telling us something. It could be time to return to the mean. But like I was saying, this is all about mean reversion. If I move too far away, I need to come back. If the price drifts too far from the intrinsic value, it tends to return. But I also warned you, don't get it twisted. This isn't some holy grail indicator. It doesn't always bounce back immediately, and that's why we have to cross-section this information carefully. So now we need to ask, does it make sense for the price to head back toward Bitcoin's intrinsic value? Because if it does, we could be looking at a potential 40% move to the upside. That's no small jump, and we're going to break that down. Not just for Bitcoin, but for other cryptos too. I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100.00, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. And what better time to do it than now? Our friends at BitUnix have set up an exclusive promo for new users where they'll cover up to $100.00 in losses. So if this is your first time trading and you're looking to join the Crypto Insight Premium Telegram channel, you might want to take advantage of this safety net in case of potential losses. Remember, BitUnix is an exchange that doesn't need a VPN to be accessed from anywhere in the world. To make things easier, I'm leaving you the BitUnix promo details and the Crypto Insight Premium access form in the description and pinned comment of this video. Now, Bitcoin's price is in a very interesting spot. As I've been saying, we've successfully broken through that old supply line the one big funds were using to protect their short positions, and then we got a massive black swan event. A surprisingly bullish one, I might add. So the question now is, what's the next major challenge? The next challenge, ladies and gentlemen, is to reclaim the top of Bitcoin's macro channel. That's absolutely crucial. Only by reclaiming that structure aggressively, decisively, can we get rid of the old bearish framework and fully shift into a long-term bullish outlook. So let's keep it simple. What do we need to see in Bitcoin's chart to stay bullish? Or rather, to continue being bullish, since we've been positive on Bitcoin since way down below? The answer is simple, and if you've been paying attention, I've already told you. Let's make it a riddle. Drop your guess in the comments if you think you've got it. What you need to see on the chart is this: a clean and confident breakout from the structure, and a failed attempt to fall back below the top of that macro channel. If that failed breakdown happens, it gives us the momentum and the confirmation to keep pushing higher. On a macro level, again, we're not talking about exact timing here. Are we going to see that move right now, or will they compress the market, pull us back down before making a serious attempt? That's what we'll unpack in the coming days, but I can tell you this: if we zoom into lower time frames like the 4-hour and the 1-hour, which is what we do in Crypto Insight Premium to spot short-term trades, we're already prioritizing long setups in the market. So yes, on an intraday level, we're leaning bullish, and that leads us to believe that maybe, just maybe, those macro breakouts we're waiting for might be coming sooner rather than later, and I think you know exactly what I mean. And if you take a look at Ethereum, pay close attention, because this structure right here is crucial for Ethereum. If we zoom in on this section of the chart, you'll notice something interesting. Just like Bitcoin, though, in a completely different setup, Ethereum is also confronting one of its biggest fears: reclaiming a key structural level that's absolutely vital to its market value. And I'll tell you the same thing I said with Bitcoin. If Ethereum can break through that level with real strength and conviction, and if it then fails to drop back below it in the short, medium, or long term, ladies and gentlemen, that would be very bullish. But like I've been saying since April 9th, when it comes to Ethereum and the rest of the crypto market, we've already been leaning long from the bottom. We've been turning bullish for some time now. Alongside my colleagues at Crypto Insight Premium, we've been actively looking for new long setups, especially for intraday trading on Delta Ether on 3 days and remotely testing across the entire crypto ecosystem. So in a way, without pretending to predict the future, because nobody can do that, we are betting on a potential short-term rally for the crypto market. And if that happens, in the long run, it could translate into that major bullish breakout that Bitcoin, Ethereum, and the entire crypto space truly need. A breakout that would allow for a much more sustainable, long-term bullish cycle. The kind investors actually enjoy riding. Now, I'm just sharing my ideas with you. Of course, they could play out or they might not, but now I want to hear your thoughts. What do you think about Bitcoin's price right now? I found someone who's wickedly funny in the comments below. And if you found value in this advanced technical analysis, don't forget to give the video like, subscribe to the channel, and hit the notification bell so YouTube lets you know when we drop more high-value content like this. And hey, don't think twice. Join Crypto Insight Premium today. Good luck with your trades, and see you next time.